Hey folks, Joe here from Charting Star. It's Sunday the 5th of March and I'm going to show you the US markets. There is a possibility that we started a new primary cycle last Thursday for the Dow Jones, which made its bottom on Wednesday, and we're going to start off with the Dow. It's a weekly chart here and I want you to pay attention on the blue line. It's a 50 weekly MA. And have a look what happened here in 2022 after we broke through that moving average. It acted as resistance the entire year until the November came. And since November, after we broke through there, we are using that moving average as support. 2 weeks here in December and now for another 2 weeks. And we had pretty much two precise hits here on with these weekly candles. We also retraced 38.2% of that rally which started in October. So we had a rally which went up, which topped out, which was also the top of that primary cycle in week 9. We found a half primary cycle bottom in week 10, and then we went into a left-hand translation, which is not usually bullish, and I thought we should run a bit lower for that primary cycle bottom. However, Dow didn't do that so far. I mean, it could still run lower next week or the week after, but also these subcycles down here, which divide this bigger red one here, that major cycle, are suggesting a low for the upcoming week. It doesn't mean the low has to come next week. It could be already the low here from last Wednesday. You have to give it a bit tolerance here on that timeline. So we have to keep an eye on that weekly chart. Before we continue with the other charts, I would like to show you two divergences which could be quite important for the Dow. The one you see here is a smart money flow divergence. At the top you find the Dow, and we talked about that we made that lower low right here, and the smart money flow actually made a higher low right here. So this makes this divergence to be positive, and that's probably another reason why we fired last week that rally starting on Wednesday. And another divergence is actually that classic Dow theory to the transportations. Up here you find the industrials, down here you have the transportations, and as you can see, the low was made here on the 24th of Feb, and then we made a lower low on the 1st of March on Wednesday at the industrials. And the transports actually made just a higher low compared to this one, and then that rally got triggered. We're flipping now into the daily chart, and I was showing that symmetrical triangle for quite a bit now, and after we tried to break out here to the upside for at least for 2 weeks, which failed the entire time, we finally broke to the downside and hit that statistical target, which is the minimum move of that pattern. In other words, once we run up here now again, that pattern is pretty much done, and we can wipe out all these targets we have in the charts. Also have a look at that 200 daily MA, which runs pretty much at the same level where that 38.2 retracement is. We talked about that earlier. So we have the 200 MA, which is actually very important for the Dow, and we have that 50 moving average out of the weekly there as well. These are the support lines for the Dow right now. And keep in mind, if that is a new primary cycle, and even if it's bearish, they usually rally for at least 2 weeks, and they could even rally up for 5 weeks if that is a bearish cycle. Usually after week 8, if you keep making new highs after week 8, it's a bullish cycle. That little add-on for the Dow. And I got another formation here. It's a 4-hour time frame, and we have that really nice descending broadening wedge, which got triggered here. We did a little pullback, and then we fired straight to the upside. The minimum target is at 33,714 and the 100% move will be at 33,845. Yeah, let's continue with the S&P 500 weekly chart. Same story as at Dow Jones. We could have bottomed here in week 20 with that primary cycle and that 50-week moving average. It's a bit different here. We got rejected in December and then we broke through there in January, and now we are trying to defend that line. And we did last week on closing. But what's more important at the S&P is that falling trend line. Everyone talks about it. We got that 3 rejections in March and August and in December. But the December rejection was a bit different compared to the other 2 we had before, because the S&P didn't make a new low. It turned around right here at that 50% retracement, and then we broke through that trend line, and now we did a very, very clean retest last week and the week before actually. We need to wait now for next week and the week after if we get a follow-through week to make sure this one here is not a fake attempt. And this is a daily chart. I had that symmetrical triangle and it looked like too perfect. It popped out and there wasn't really any pullback. We just did these 2 retests of that falling trend line, but now we pulled back, and this is actually a very clean 1, 2, 3, 4, 5 structure. And now we need to wait what's going to happen. A lot of people see this here as wave 1 and they see this bounce as a wave 2. The same thing what we had here as wave 1, wave 2. We had an intense rally for 4 days. And everyone thought, oh, this could be a new cycle. This could be the start of a complete new move to the upside. In case we do, and in case we run higher, I put you here these dotted lines for this rising bearish Wolver wave wedge, which runs here at around 4,256. And I don't want to say we could run all the way up here. I don't like the S&P 500 too much right now because it's not as clean as the Dow Jones for me. And I'll give you here another example on the 2-hour time frame. For example, we had a low suggested here on the 1st of March. And we did, and now we are rallying, and this little sub-cycle is suggesting, in combination with that bigger purple one, a low on the 13th. And that doesn't really, it could fit to that whole theory we have with that primary cycle, that we are making a low in week 21 or 22. And that's also a possibility. If that is the case, that might be a good buying opportunity. Need to watch these retracements here. By the way, we hit also the 38.2 very precisely, like what the Dow Jones did as well. So yeah, either we run much, much higher, or we reject right here somewhere, or we are actually making a lower low next week or the week after. Yeah, you have to be open-minded in these times. Yeah, same story also at the Nasdaq. Very similar situation here. This could be the bottom in week 20 of that primary cycle. I gave you 5 weeks ago that top here, that red resistance, which worked out perfectly. And instead of using the 50-week moving average, we have the 30-week moving average at Nasdaq. And we broke through there also in January, and we got now that support last week, and we back tested that. That bigger cycle here, by the way, suggesting a low sometime in April. And while having a look here at the daily, I gave you that W-shaped bottom like weeks back. And also have a look at that 200-day moving average. Same story as at Dow Jones and as in the S&P 500. It also pulled back 38.2% of that rally we have since October. Yeah, and this is my chart I was posting quite a lot on Twitter. I love this one because that projection actually you see here worked out perfectly. We nailed that low on Thursday. And we have that failure here of that bullish flag or descending broadening wedge. Remember probably everyone was talking about that on Twitter 2 weeks ago. It failed. It got that bearish target down here. I gave you that green support zone and turned around on Thursday, and now we're seeing that sick rally. I also mentioned that December high at 12,203, which is also the mob. The make or break it level. So if we continue to run up here, there might be another back test of that level before Nasdaq wants to move probably to new highs. Yeah, that's about it. I hope you liked this one. I wish you a nice remaining evening, and I see you on Twitter tomorrow. Thanks for watching. Bye bye.